So today we will talk about Fiverr, a company I'm invested in. It has just released its fourth quarter results, and in this video we'll take a look at them. First we'll take a look at its shareholder letter, then move on to the financials, and finally we'll jump into Excel to get a better understanding of the stock's valuation, whether it's overpriced or a bargain, and whether I should hold or sell my position. So first, as we see here, the company's revenue came in above guidance. The company was expecting revenue between 100 million and 102 million, but it actually hit 103.7 million. Good sign. Meanwhile, the adjusted EBITDA came in as expected. Now, talking about the marketplace, as we see here, there are about 3.6 million active buyers. But you know, this number by itself doesn't tell us much. For it to mean something, we need to look at 2023. As we see here, at the end of 2023, the number of users on the platform was higher, at 4.1 million. So we've got way fewer people using Fiverr's platform, which is happening because currently the macro environment is not good for small and medium businesses. At least that's what I understood from reading their earnings conference. But that's why the number of users dropped. 12% according to my calculations. On the other hand, the spend per buyer has gone up from $278 in 2023 to $302 in 2024, an 8.6% increase. So even though there are fewer users, the ones sticking around are spending more on the platform, which kind of makes up for the loss. And we will soon see how this all affected revenue. Now, another important detail is that Fiverr's take rate has also been dropping from 31.8% to 27.6%, which isn't a good sign either. And lastly, now 29.1% of the company's revenue comes from the service division. And that's important because you see, Fiverr is changing its business model a bit. To avoid depending just on the marketplace take rate, the company has been growing its service division over the years. As we see here, if in 2022 the service division accounted for very little of the company's total revenue, now it represents a much more considerable chunk. And that's a good thing because it diversifies their sources of revenue. Now, to give you all a clearer picture of what marketplace revenue and services revenue are, let me read this for you. Marketplace revenue is defined as the revenue generated from transaction commissions paid by buyers and sellers based on orders completed on our marketplace. Services revenue is defined as revenue from optional value-added services that we provide to our buyers and sellers. This includes advertising services of Fiverr ads, subscription services such as Seller Plus and AutoDS, as well as other services such as financial or learning tools. Now let's move on to the financials. On a quarterly basis, revenue grew by 13.3%, while gross margin dropped from 83.1% to 80.5%. Meanwhile, on an annual basis, revenue went up by 8.3%, while gross margin fell from 82.8% to 82.1%. Now, of course, I don't like to see this gross margin going down, but on the other hand, it didn't drop too much, and this is still an 80% gross margin, which is an excellent margin. Now, back to the quarterly basis, in the last quarter we saw a bigger operating loss, as we see here, going from negative 1.6 million in the fourth quarter of 2023 to negative 5.8 million now. On the annual basis though, the operating loss stayed the same at around $15 million. And finally, both on an annual and quarterly basis, the company delivered a higher net profit when compared to the previous year. But how can a company with an operating loss still show a net profit? The explanation lies in the financial gains, which gave a boost to the company's results, and also in some tax benefits. As we see here, in the fourth quarter of 2024, Fiverr recorded $13 million in tax benefits, so that's why net profit was much higher in this last quarter when compared to the previous year, when compared to 2023. Now, before we start talking about Fiverr's cash flow statement, if you are enjoying this video, don't forget to leave your like, and I also invite you to subscribe. Thanks. But also, what am I thinking about these results so far? Well, honestly, I wish they were better. I wish we were seeing more growth here, so I'm a little bit disappointed. But on the other hand, I also get that businesses go through ups and downs and that things take time to develop and happen. Anyway, let's move on to the cash flow statement. In the third quarter of 2024, Fiverr delivered an operating cash flow of about $30 million, compared to $27.5 million in 2023. And this is a 29% operating cash flow margin, which is simply excellent. Finally, another point that I think is worth highlighting is the share buybacks the company carried out in 2024, totaling $100 million, which represents about 11% of the current market cap. And lastly, before we move to Excel, let's take a look at Fiverr's balance sheet. And here I will get straight to the point. What worried me the most was the convertible notes. I was afraid of a massive dilution of shares here. But from what I've understood, Fiverr can pay these convertible notes with either cash or shares. So if they have cash, they can pay everything with cash. And as we see here, they have enough cash to handle these convertible notes. After all, while the short-term convertible notes total $457 million, Fiverr's cash equivalents and marketable securities sum up about $421 million. So with that, Fiverr already has almost enough to cover its convertible notes. But they still have $144 million in bank deposits. So considering that this company is generating cash, I believe they will be able to deal with this debt easily. Yes, they will end up with a tighter cash position, but nothing serious in my view. Now let's go to Excel to find out whether it would be better for me to sell or hold my position. And by the way, my average price is around $30. So Fiverr stock current price stands at $25.22. And what I want to know is this price cheap or expensive? Which expectations, which premises the current price is reflecting? For instance, what would be the fair price for Fiverr stock if it grew at 5% for the next decade? As we've seen, Fiverr's revenue has grown by about 8% last year, and its average growth rate since 2018 stands at 35%. So let's project a 5% revenue growth rate, which I think is quite conservative. But we always want to buy businesses, stocks priced on conservative scenarios. Now, since 2020, Fiverr's average operating cash flow margin stands at around 15%. But as we've seen, the company is delivering a much better margin than this. In the last quarter, for instance, Fiverr delivered an operating cash flow margin of almost 30%, which is simply excellent. So though we will project a 15% margin here, this business might deliver a much higher margin in the future as it matures. And finally, let's project here that Fiverr's free cash flow conversion rate will stand at 90% in the future. After all, this is not a very capital-intensive business, requiring very little capex. In this case, Fiverr's current fair price would be at around $26, which is pretty much the current price. So I don't think this stock is expensive, you know. For me, it's a good business trading at a good price. At conservative assumptions. Now, what happens if, instead of growing only 5% per year, Fiverr ends up growing 12% per year on average? And what if, instead of delivering an operating cash flow margin of only 15%, it ends up delivering an operating cash flow margin of 20% on average? Then $52 would be a price that would make much more sense for Fiverr. So to close this video, the results were not great, but I'm still holding the stock. It's a good business trading at conservative assumptions, and I think that in the long run, Fiverr will end up delivering better results than what's being priced in today. Anyway, that's it for today, and see you next time.